Hey, everybody. How are you all doing? I trust everyone is doing absolutely fine. And welcome to the live trading profits. Now, it's been a great week, but man, how amazing that this week has been in terms of our pairs, euro, dollar, and gold. And greetings to all my friends. Hey, guys who are live. John, good to see you, buddy. And I know a lot of my buddies joining straight on social media. So, guys, welcome. Let's have some fun. Now, live trading profits, as we all know, our objective is very simple. We want to create wealth, whether you've got $1,000 in the market or whether you've got $1 million in the market. The objective is the same. I mean, at the very minimum, I think you ought to be striving to make returns in a month, wait for those strategy trades to turn up. And then in any given month, you're going to be making, at least what you would make out of your money from the banks, because we are trading these currencies, major currencies. So you got to be making at least a minimum 3% a month. Then thereafter, your goals, your objectives are exactly what you want them to be. So let's just kick straight into how do you like this for administration? There I am chatting to you guys, but the video is off. But here I am. Glad to see you guys, and let's dig in. So you are screen sharing some live. Now, here's what's happening with euro. I really think it's fascinating. Let's just go into the daily time frame. I had some feedback from guys say, "Hey George, your show is called Live Trading Euro. So why did you spend so much time last week digging into the other currencies?" Well, it's beginning of the month, and some of the guys had asked me to look at different currencies, but I fully respect this is, we trade gold and we trade euro dollar. So we're going to focus on that. Now, have a look at what's happening on the daily time frame. This is euro daily. Now, isn't it just amazing just how precise price action is? It really is. And, if you've been tracking what you've been going through this whole year, what is appearing in front of you in terms of the charts would not be a surprise. Okay. So there's euro versus dollar. I mean, we spoke about this quite a long time while we're out here, actually, if you remember. And we kind of said, well, the market might be drawn down to that level, but you also said that the market does things that by now are becoming fairly predictable for us. Whenever you see a breakout, there's a breakout. Okay, why is it a breakout? Well, we're breaking out of something, out of this double bottom, out of this, and there is follow through. Okay, so 3 candles breakout plus follow through. You gotta immediately say, hey, measured moves. If the guys who are creating the breakout are strong, they're gonna want to see a measured move. Of course, there will be a pullback because people have to take profits out of the market. And of course, the other side has to try and make the breakout fail. So while we were here, we spoke of, there's a breakout point, and that's a move. That's a breakout move. You see that? And we said, well, if the bears are strong enough, that's the target. That's where they want to go. Now, I don't know what you thought when we were there, but if you understand price action, say, okay, that makes sense. If the bears are strong enough, that's where they want to go. But there's this level of support. Let's wait and see what happens at the level of support. And like I've said before, when you get level of support or resistance, whether it's visible, like we can see this level here, or it's a hidden level of support, something's going to happen. Either we'll get a bounce or get a breakout and look at confirmation. So we ought not to be surprised with the present price action. And if the market gets down to, well, let's not get surprised. Point is, if you had missed taking the trade anywhere within here, and you saw that you have to take a trade, once you get your setup, I'm not going to drill down there because we've looked at it, but, get a setup there, trade, put your stop in the correct place. So where do you take your profits? Well, optimum level is there, but you have to manage through that in case, the market bounces. Or you can just put your profit, take profit and go away. Remember, set your profit, go away, or sit and watch, each and every day if you trade in the daily time frame. Markets are fractal, so whatever we see on any time frame will repeat itself. But again, the other thing that we spoke about, and which by now ought to be very familiar, so you get the measured move of the breakout, but you also get price extension. Okay, so leg one, there's a pullback from the end of the leg one, pull back to where the market is turning. Then you kind of say, okay, leg one, pull back, leg two, market might get there. So again, no surprise. Even if you get a huge candle that turns here, it's gotten to the target minimum objective. And again, there is further confirmation that further evidence that the bears want to get to here. Measured move of this, little trading range here up to there. If we break out beneath that, which we did, breakout, follow through, breakout to Monday, follow through yesterday. So, bears want to get here. Will they get there with one candle? It's possible. The market can do that. Or there might be a pullback to test the breakout point, test the EMA, and then come down there. So price action gives you predictable patterns. So this is what's happening on the euro at this time from now. It doesn't end there. These are the things that we gotta be doing. So now you gotta be saying to yourself, okay, what do I see in front of my charts? Clearly, there is a large trading range. And if the bears are strong, if you're trading as a bear and you're trading off this time frame, and it can be any time frame, you say, hang on, if we break beneath this, then what's the goal? The goal is a measured move, right? Goal is a measured move. Okay, too many lines here because of my daily separators, but I can still work with it. So you'd be saying that high, that low, if you break beneath that, that's a goal. That's where the bills want to go, want to test that pullback. So which gives you an opportunity, if you want to jump into the market, at any time, if you get the setup, get into the market, put your stop in the right place, that's where the market is likely to go. If you're a bull and the bulls are strong enough and you get a double bottom, higher low, the bulls want to break above this, and then the other side of it, equation comes into place. Okay, so the bulls, if we got a double bottom and they get, to break out above this, they want to get to that level there, which will be somewhere in the 1.2829 level. So, I mean, these things, or these things in terms of the way of looking at the market, you have to just start getting familiar with them. We've covered them at length, and as we look for our trades, we will continue to plonk them in and track them. So that's kind of what's happening. Pretty insightful and exciting. So we are never taken by surprise if we are trading with price action. Okay, so I'll just open it up a little bit more. So that's what we're talking about. That's a breakout point, okay, and that's the full length of the breakout. So measured move is down to here, or a little bit more precise if you want. First leg, pull back to the moving average, there is a target. So if you were in there and you're holding on to your trade and you didn't want to come out in any case, if you did because you thought a double bottom, fantastic. But if you hold on to see if you get down to there, perfectly fine for you to hold on to the trade. If you're not in this trade, okay, and you kind of missed it, you're on holiday, I don't know, whatever, you didn't take a trade, and then you see, okay, that's where the market is likely to go. You got double tops here, close beneath moving average, you can still take that trade on the assumption that, let me see what happens here. If I get here and the market turns, well, I'll take my profit. But if it breaks out, I'm going to hold on to the trade. Okay, it's broken out, breakout, follow through right at this level, hold on to the trade. Okay, this is quite interesting, because what happens sometimes, you know, you've experienced the probabilities, right? You really are diligent with your strategies. You're absolutely sticking to them, and you know that at best, I always say work on 60-40. So out of 100 trades, 60 you will win and make money. If you trade in 1%, make 1%, 1.5 or 2%. 40 you're gonna lose of the trades. That's how it works. So you're gonna say, okay, 100, 60, 40, 60 times 1%, it has 1.5, 90, a lot of money. But you can manage your risk. Traders equation, risk, reward, profitability. Okay, you can manage your risk, manage your reward. You can't manage random distribution. You just don't know when those 40 will come. Okay, so what happens is we take a couple of losses, and then our minds, because we haven't coached our minds to remain disciplined and to just work the market based on strategy, you get all emotional and all sorts of things happen. So by the time you take this trade, you kind of say, oh, okay, so I got to switch off my emails. I should have done that so we don't keep pinging away here. WhatsApp it off. Okay. So you take that trade, you see all of this, but you kind of say, oh my goodness, now there's a pullback, there's a double bottom, and you forget everything. Because you were in a nice, whatever, by that time, maybe 1-to-1 or 2-to-1, it's like good money. And then you get a pullback and you start going back a little bit, you lose a bit of the profit because the market has to pull back. You close the trade and you forget everything that's happened to the left. And then the market does, just one huge move to take and say, oh man, I should have stayed in. You've got to just work the strategy, and you got to understand, if you are disciplined with every trade based on strategy, random probability will okay. You don't know when the losses will okay. Just let it work out and you will make money as you go along. So that's where we are on the daily time frame. And I really keep emphasizing the markets are fractal, F-R-A-C-T-A-L. Whatever you see on this time frame, you see on a lower time frame. Okay, so remember, daily setup, high of yesterday, low of yesterday. Then of course we'll go to the 5-minute time frame. I want to just look at gold on the daily time frame, then we can go to the 5-minute and have a look at what's happened since the Asian session. Pretty decent setups. If you're up and about, you could have made some money. Okay, so gold. I looked at this and I said, man, look at that day. I mean, that's probably like 850 pips. That's the largest daily range just by looking at, I think this whole year. I haven't gone back to look at this move, and it occurred in the Asian session. Never look at that. I mean, that's just incredible. This is gold, but again, no surprise, we were talking, when we were speaking from this breakout occurred and all of these double tops, we said, well, the beauty of price action, there is a breakout, breaking out beneath this inside pattern. So there's a breakout. Okay. And if you're a bear, you say, well, I'm going to just hold on to my trade because that's our goal. That's where we want to absolutely get to with the trades. And what other thing they've put in, of course, is the first leg of the move after a pullback is likely to be followed by a second leg equidistance. So at this point, you'd have said, okay, there is the first leg of the move. You could put it up there, but then now you're going for super profits. I always like to start off with the nearest profit first, but there's nothing wrong with putting it up there because it's still bearish candles. But if we track in the breakout, there is the first leg of the move. Now, there is a pullback, right? There is a pullback. And you say, well, that's the optimal level to early profits, super profits, early profits. So I've taken my trade in there, I'm going to hold on to it. Or you might say, well, listen, I missed out the trade, but look at my analysis, and in there you say, I'm going to take a trade. Stop up here. Okay, remember, there's no, better go as high as possible without any other pullback. This candle had taken out that high, you could put it there, but there's your stop up here. For any reason, so I'm going to put it at the beginning of the breakout. Well, that's fine, take a bit of a higher risk. And that's where I want to go. Then what happens? You're going to have to decide and make some decisions. But your decisions have to be based on logic. So you're expecting leg one, pullback. Leg two, you're expecting measure move. The market doesn't give you that. There's a bit of a double bottom occurring here. And then it starts to turn. But remember, we always said, what happens at the moving average? Okay, so we've got our breakout. What's happening? What should I stay in the trade or should I get out of the trade? At this particular point, when you adjust here, if you adjust here, okay, there's a double bottom, close above the moving average, inside candle. When you're here, it is perfectly legit and logical to say, okay, I think the market is turned. You know, the bulls might want to come and test here, and maybe somewhere within here we might resume again. But at that point, if I've taken that trade, your stop is up here, you don't know how far it's going to go. It's okay to close your trade. A little bit of a loss, whatever it may be. If you've sized it correctly, I don't know, 1/5, 1/4, 1/3 of a risk, not a problem. You get out because you have a look at what's happening at the moving average after you've had double bottom, and close above the moving average. Then we spoke of 50% pullback whenever you have a breakout or getting messy. Okay, let me move it a bit. 50% pullback is very important, right? So there is the beginning of the breakout, 50% pullback, the market might turn within there. And all of this price action you've seen is really happening at the 50% pullback. Okay, but there is no opportunity for you to jump into any trade. If you are not in a trade, if you're really good and super fast, I can't do it. But if you're really good and super fast, if you're in this trade here, then you see that and you say, okay, I'm going to come out of the trade because the bulls have a legitimate setup. I'm just going to sit back and look. I don't want to wait and see and have my stop taken out, so I'm going to wait and see. If you're fast, you can get out of the trade. You can, you can then enter into the trade as a bull and wait to see what happens. But I'd rather just get out, grab some coffee. Maybe I should do that. Grab some coffee, reflect and think. Don't jump in and out because you can get yourself confused. Okay. You might just say, okay, perfect setup, jump in, and then it turns. What did you do? Oh, let me get out. Oh, before you know it, 2, 3, 4, 5 silly trades, and you just losing capital unnecessary. There is money to be made in the market. Okay. I mean, do any research. You trade in all these major currencies and gold. If you look at these banks, US, Europe, Australia, China, etc., Japan, I mean, at best, if you get 3% per annum, man, you got a ton of money and a lot of pull with your bank. So if we are steady and just follow our strategies, our minimum goal is to make that a month. Okay, so there's no need to jump in and out of trades. You can really manage your investments very well. Whether it's $1,000 or $1 million, you can make a lot more money than any bank could give you. And when you get very good, of course, then who knows how much you can make. So there you go. Now, if you're out of the trade, okay, or if you've stayed in, holding on to your stop, and you see this, you're like, okay. So I had a 50% pullback. The market turned here. So what's the market respecting? You can pull up to that original first bear move. That's where the bears actually started. I didn't use that as a breakout because we didn't broke out beneath that, but we didn't close beneath that. So that's why I started using that. But maybe the market is seeing that as the actual breakout. And if that's the case, also seeing that as the full leg one. So that's a breakout. That's why the market is standing at this 50% level. Ignore my light blue line. I've put that in, so that as the market goes forward, if you come back up today, it's really marking this double top at this point. So hang on a second. Say, fantastic. This is brilliant. Okay. Now I have the market turning. So it's a double top with this invisible level, which is a 50% pullback. So fantastic. That's the setup. I gotta wait to see if I get an entry. Always want to see the setup first. Don't jump into the trade here. Just that's my setup. Now give me a proper entry to get into the market. Okay. So you would have said, okay, 50% pullback, fantastic. I'm not going to get here. Let's wait to see if I get a second entry. That could have been your second entry if you wanted to take that, because the market could have accelerated beneath that. But if you're taking that because of that double top here, your stop is going to be above that. It's going to be above here, or you can go a little bit more conservative. But that's a correct place to be. Get stopped out, fantastic. If you missed all of this, kind of say, okay, market is standing. Maybe you hadn't thought of the 50% pullback, and you've seen it turn. I say, okay, no, that's fantastic. Let me wait and see what happens. Then you get another almost perfect double top here. Now, if you'd seen that 50% pullback and the test of that, and you're waiting for an entry and didn't take that entry, that's where you got to put your entry beneath that level. Okay, stop above here if you want. If you're going to say, oh, it's too close, you can do a measured move. Still have to talk to you guys about how to place stops, but we'll get there. Okay, you can put the stop above here, measured move of that, because you're saying, well, if the bulls break out above that, they might want to go for a measured move. But I still think the bear case is strong, so I'll put my stop here so I don't get stopped out easily. You can do that as well, or you can go and put it up here. So, 1, 2, 3 places where you put it. You're just managing your risk that you got in the market. By the way, in terms of risk, I've spoken about this when we spoke at some point about our trader mindset, but you really, really have to know the point where things get unpleasant for you. I've been there and I've learned when things get unpleasant, I just then it's absolutely crazy. I don't follow the rules. I start to. It's just absolutely crazy. The session that I said I was trading comes to an end. Then I don't close the trades because I've just gone over my risk, and now it's panic. It's just total foolishness. But it teaches you what your risk appetite is. So every time I've done something silly, and strategy is fine, but you got your risk wrong. That should be teaching you lessons. You've got to work within your risk appetite, guys. You got to work where you're comfortable. That, okay, if I get stopped out today, I'm fine. If I get stopped out a couple of times today, I'm okay with it. I'm trading euro versus dollar, and I'm trading gold. If I get stopped out twice on the euro, if I get stopped out twice on gold, I'm perfectly fine with it. You have to know and understand your risk appetite. So if you're happy to risk 1% on a trade, that's fantastic. Don't forget random distribution, which means you might get stopped out if you trade in lower time frames once or twice on one pair. Okay, so are you okay with 2% lost? Are you strong enough to walk away and say, I'm done? I'm telling you, I've lost tons of money because I'd assured myself, I've been so sure I can manage my risk. Then it just goes crazy. Everything goes out the window. You try and fight the market, try and recover. Absolute craziness. Understand your risk and stick within it, whatever it may be. If you're happy to risk 2%, remember it's not 2%, it's 2% per trade. You can quantify risk. If you're happy to risk only 2% per day, but you trade in a 5-minute time frame, then trade 0.25, trade a quarter. So you can take 8 trades and still be within your risk parameters. Then enjoy the game. That's what we want to enjoy, managing our wealth and growing our accounts. So if you didn't take that, so a point was, you can put your stop here, or stop here or stop there based on your risk. So you could take the trade there, or you could then wait and look to say, well, I want to see a close beneath the moving average, close there, and you take a trade because you're waiting to get down here. That's what you see. Here's another measured move. You kind of say, okay, there is a clear double top. If the market breaks beneath here, likely to go for a measured move. Now, you didn't know all of this was happening, okay? And then when this happens, you can't come and say, oh my goodness, let me go. Remember, we are price action traders. You can't say, let me go and now do a whole fundamental analysis. Let me find out why gold did that. Who cares why gold did that? We are price action traders. Okay, we're not surprised, like, oh, okay, look at that. Now, if you set your profits there, and then the market turned, then we say, oh, bugger, man, I wish I just, been a little bit more conservative with my profits and maybe set it in, which would make sense above this double top. Maybe you've missed out, etc. Take it and bank the money. So that's what you got to think about now. So let's have one quick look before we go a little bit deeper into the day. I think it's an interesting day. Okay. We've kind of looked at this, so we don't need it. Clean up our charts. I'm a private pilot. I fly Cessna's fixed wing, and I remember my very first instructor. Man, when every time he got out of the plane, he said, "Okay, cheers, George. I'll see you in the office. Can you clean up your plane? Pick up all." That's kind of stuck with me. So that's why I prefer clean charts when it gives you view. Clean up your charts. Don't keep things cluttered. But here's something that's interesting that you need to keep in mind so that we are not surprised. So if you're going to be saying to yourself, okay, was that dramatic move there? Fantastic. If you're a bear, what are you thinking? You said, hang on a second. Okay, we kind of got repulsed here, but if bears are strong, that's an inside pattern creation on the daily. The bears at some point would like to break beneath this. If the bears break beneath this, where they're going, well, the measured move is down to this level. They want to test the low of 2020. Would that be a surprise for you? So that's a key level, the low of last year. And maybe this whole price action that's been created here is to create the momentum to get a break and a measured move to get to that level. So, don't be surprised when you see the market move in that direction. If you got trades, hold on to the trades and see if we do get there. If the bears are not strong and we get a double bottom, high, low, a nice setup for the bulls, if you're a bull, you're going to say, well, where do the bulls want to go? Would it surprise you? The bulls broke above here and create a new high for gold. Okay, break the high of last year, create a new high. So it's just all this information that's been provided for us that just helps us to create profits out of this market. Okay, out of the markets that we trade in. So what I want to do is just go and have a look, but then have a look and see if there are no questions outstanding. Fantastic. I got in on the pullback on gold, made some cash. Well done. I love it. Watching to see what gold does. Okay, wait for the price action to unfold and keep on looking for your setups. When you see it set up, take it. I was up all of that move. That's fantastic. Well done. When using the measured move tool, does it matter if the zero is at the bottom? No, it doesn't matter. It doesn't matter. So the question that's been asked by John is this. So measured move, okay, there is a measured move tool. What happened? There you go. So I'm just starting from there. Let's assume from here to there. Okay, so there is a zero. It's equidistant. It really doesn't matter, which way you set it up on Doesn't matter where it is, because from the low to the middle, you get an equidistant move. That's the measured move, is the equidistant move. So that does not matter, but thanks for that. Okay, so if you're looking at gold in terms of daily price action, question you're going to be asking yourself is, today, when we end today, what are we going to get? Are we going to get an inside buy, inside, which is breakout mode, but we're still within this huge move? What is important for you, which you should have just as an indication, or in there, is 50% pullback, right? So price action currently is within a 50% pullback. So that's a really strong level, 50% pullback. Market is going to decide which way to go. Do we break out of the 50% pullback as bulls? Because it's breakout, they will have to break out, come back. So you have to see what happens, if there's a retest. If the bears are strong, depending where we end up, we want to break out of that. But there might also be a pull, because that's a very strong level, the 50% pullback. Okay, so let's jump in and have a look at what's happened with the day so far. Gold, well, okay. Someone's going to say, George, what do you mean what's happened today so far? On the 5-minute time frame, Let's have a look at that. Okay. So depending which session you traded, so, we've had the Asian session and we are into the European London session. So just depending which one you're trading. And if you were in here, these are things that, progressively, you should actually be waiting to see this before you take any trades in the market. You need to let things unfold before you, then decide, okay, this is the information that I am being provided. Just have some water. Okay. So at this point, half an hour or so into the session, you'd have, a potential measured move, of that trading range from the low of the US session, open, low, and you're saying, well, okay, so trading range, I gotta find ways to see if I can get into the market. If the market does break beneath that trading range, it might be a measured move. Okay, and the market did break beneath that. Okay, so breakout, but look at that, no follow through candle. So don't make it work, because you want a breakout. Okay, if it's one big candle, fantastic, but I want to see a pullback. If it's a small candle, I want to see a follow through. But I get one candle, I got a tail, I've got a dodgy bull. There is nothing for me to trade. There's still the measured move. So you got to avoid saying, oh, okay, man, I should have just jumped in because what happened? Look at what happened to it. If you just jump in, you are changing the probabilities against you, against yourself. And we want to avoid that. We want our probabilities to always work in our favor, and that happens with the strategies that we are trading. Okay, so the market does get to your hidden level of support. And look at that huge candle. Fantastic. If the bears were strong, or you want to see follow through. Okay, but we don't get that. So now you should be saying this particular pattern is exhausted. What else am I getting? Okay, so this is what you're looking at. That's the pattern you're looking at to trade. Now it's exhausted. We've got into the original goal of the bears to get to that measured move. So what else is the market giving me? So there is a pullback. which is almost a test of that breakout or a test of that level. So now I have a lower high, and if I have a lower high, I'm trying to say, okay, maybe the bears might want to put double top, etc., and might be ways for me to get into the market and trade. Because all of this beautiful stuff you haven't seen. So that stage, that's where the market turned. It also failed break beneath our level of support. Lower high. This high is lower than that high. Lower high, it's a test of that. Fantastic. Remember we spoke about separation. We needed, at least 6 candles. In our 5-minute price action move, 6 candles separation, price separation, before you jump in. So, I would have loved to see a double top, like this kind of double top here before we had breakout above that, decent enough separation, then a lower high. But, a couple of candles next to each other, you can't jump into a trade like that. You have to wait to see information you get. The bears try and break out again beneath this level, and they failed, and immediately we have that reversal. Okay, now at this point, opportunities are starting to appear for us to trade. Market go to the measured move, failed break beneath that, so bulls are in control of the market at this stage. Attempt to close above the moving average. We always ask ourselves what happens to the moving average. Get a lower high, so we get in sideways price action, trading range, not clear, who's in control, not enough separation, not enough distance for you to take any trade. So nothing to do in here. Now you gotta wait and see, okay, I get a big bear candle. If the bears are strong, they're gonna give me a follow-through candle, guys. That is absolutely important. If I get a follow-through candle of any sort, then I'm gonna wait for the pullback, and I get my pullback, I'm gonna look to take a trade. And if I take a trade, measured move, that's where I want to go. So if we'd had follow through, pullback, good enough, take a trade, stop up here, that's where you want to go. But you didn't get that. So you have a failed breakout, a decent bull reversal candle. If you want to take a trade, that's the first trade that you take. Okay, and where do you put your stop? Put your stop at this measured move, or you could be a little bit more conservative if you wanted. Just say, okay, instead of a measured move, the trading range, I'm going to put the stop at this measured move here. What is my goal? Where is my earliest profits? Measured move again. Okay, this low height of the trading range, that's my goal. That's where I want to go. This is one of the strategies we talk about. Reversals at hidden level of support. There is the reversal at the hidden level of support. So there is the setup. Okay, remember, I always talk about the setup. There is the setup, reversal. There is the hidden level of support here. Failed breakthrough reversal. But now I need the setup. Okay, failed break beneath that, decent enough reversal. I gotta take a trade and put my stop in the appropriate place. If the bears come back, I'm gonna hold on to it and see what happens. Okay. If you didn't take that trade, but you've recognized that is a trade, you've got to find ways, to get into the market. Okay, you've got to find ways to get into the market. As it is now, there isn't clarity. If after this close, above the moving average, this had been a decent enough test of the moving average and a bull reversal candle, you could get in there. But as it is, that is not clear. So, for example, if we had see this little candle here, for this candle, forget about the size, but down here, you could jump in there and get into the trade. But if you miss that trade, then you gotta wait for the setup to come. But that's the first legitimate place, and you're trying to get to your measured move there. Then, as the market starts to move forward, okay, you can see we're breaking above the previous high. There's a pullback. There's a trend resumption. Still nothing for you to trade. Why is there nothing for me to trade? Because at this stage, if we'd had this candle and a follow-through candle with a breakout above that level, okay, then we have a pullback. That's with breaking one of the previous lows, test of the moving average. We could take that trade, have the stop here. So right now you're watching. But as the market starts to do that, something is happening. You say, but hang on a second. Why are there no pullbacks to the moving average? Because it's a very strong trend. It's called a small pullback bull trend. We haven't spoken about that in our strategies, but it's one of the strategies that we trade it. Just wait for the next pullback, but your stop is going to be way down here. Okay. Because the market is going up and it's staying way above the 10 moving average, I'll take blue line, which is an indicator of strength of a breakout. Okay, so once you observe that, you've got to decide, okay, where do I put my stop next time I see an opportunity to jump into the trade? So you just jump in at any pullback. There's a pullback, but your stop must be at the correct level. But let's not get confused or worried about small pullback bull trends. The trade you would have taken based on what you've discussed would have been here. That is the exact place. And your goal will have been to get here. So if you set your profits at that level, fantastic. You would have gotten your return, 50 pips or 1-to-1 return, which is perfectly fantastic, depending whether you've reached 1%, 0.25%, whatever, but that would have been fantastic. A good return. If you're trading small pullbacks, there's a few other ways you could have jumped into that trade. Up to then, you just wait until you see. Now, what I like to do, which I've said to you, I prefer when I'm in the market to manage my trades so I can optimize my profits. If I have to go away, if I'm busy with something, I just put the take profit in the market and hopefully come back and yeah, okay, fantastic. The market has gone up, but I managed to make some money. So you'd have made some money earlier on. But if you're managing it and you're seeing the small pullback bull trend, then all you got to do is just keep moving your stop up to this higher low. Market moves up here, move it to this higher low. Just keep moving up, until the market turns and breaks the moving average. Once it does that, then you come out of your trade. That's managing a small pullback bull trend. So how to manage this is something else that we'll talk about at some point. But that would have been a good trade if you're in the session. Now, you come into the UK session, man, look at this. We just got to wait for more price action because there's nothing for us to do here. We've got okay. So if market breaks out, I mean, you can look at the price action now. That's definitely breakout mode. Okay, the market will not perpetually stay in a very flat line. So breakout mode. So if market breaks out above this, breakout above this, that's where they want to go. Let's wait for the pullback and let's take a trade, put the stop in the correct place and see if we can make some money down there. The other side of it, of course, the market may decide to break downwards, bearish price action, because that can happen. Remember, we were looking on our daily time frame. We are within that 50% pullback of Monday's move. Okay. Now, would that surprise you? If the bears came and gave us a couple of strong candles and pull back, we're going to trade it to see if we get a new low, and we might just end up testing yesterday's low. So we're right in the slot where there's some decent opportunities that may come up if it occurs within your particular session. Just check out this question. Is the 50% level at the high of the Asian session? Let's just have a look at that. Okay, what I'm gonna do, let me just clean out your plane, George. Let me just clean out the chart, because once we pop up to the daily, it's gonna look quite messy. Okay, so if you go up to the daily time frame, I think I want to put that 50% pullback. It's a very good question. Okay, let's talk about the 50% pullback of of Monday's move, right? This huge move that we got here. Okay, hopefully you guys can see that. Okay, that's the high, that's the low, so that's 50% pullback. Let's just put in a shape within that area. Okay, so that's kind of like the 50% pullback of this huge move that we have. I mean, that's a very strong market. Strong level. So now if we go to the 5-minute time frame, let's see. Okay. So you can see our 50% level is down there. So that's a pretty strong magnet. Okay. It's a very strong market. So the market can get pulled down to that level. And if the market starts to break out above this and pull back, then the bulls have to be very strong for the market not to come back to this level. So what you got to do now is you got to wait. You know, things become absolutely clear. I mean, you can see the clarity we got here. You just have to wait for clarity. What are we waiting for? Wait to see your breakout above a level. One big candle or a couple of candles and follow through. If it's one big candle, it's going to come back and give you a decent test of the rising 10 moving average. Could be a couple of candles, confirmation. I prefer when there's confirmation of breakouts. They are coming back for the cash. That's why I love price action. You know, it says it's coming back for the cash. So wait for it. It's coming. Okay, euro. Let's have a quick look at the euro and see where our profits are so far for the day. So there's where we are currently. Now, have a look at this. You must try and have a look at this. I know you will on your own at home. So here we are. Okay, so you're in the market. I mean, clearly you can see you should not be jumping into anything at this particular stage. Market is going sideways. So you kind of say, well, okay, if market breaks down beneath that, there is a potential measured move. If we break out above here, there's a potential measured move. That's where bulls want to go. I mean, that's like 3 pips. And that's like 3 pips. And you kind of say, well, you know, how are you going to put your stop? How are you going to put your +1 pip to take a trade? There's no way for you to make money. So you got to wait. You have to wait until, you know, the ranges kind of increase and things are clear. So here's what happens. The market gets to the hidden level of support. That's the hidden level of support. Then it goes sideways. Then we break beneath the hidden level of support. But are we surprised? We ought not to be surprised because we should be busy with our measured moves. Okay, so there is the breakout beneath it. There is the follow through, but we get into a hidden level of support for you. The pattern was this. Okay, that's the pattern. Breakout beneath that. And when you see that, you've got to get into the trade. Where would you put your stop? Okay, there is where you want to jump into the trade, above this candle or above that candle, because there is a pattern set up, failed breakout beneath a hidden level of support. Market is turned. There's no 2-bar reversal, so you put your order above this. you're not going to, you'll be triggered in. If the bears, if you're triggered in and the market turns and your stop, is in the correct place, which would be a measured move potentially either there. Okay, just beneath the low of yesterday. So you jump into the trade and then you've got to wait. You have to wait. Okay, so first port of call. Measured move, a bit cluttered. That low to that high is taking you to that level, so which is almost the top of the trading range. That's where you want to take your profits and then wait and see what happens. So within here, there is nowhere else if you didn't take this trade to jump in. If we did a pullback to the moving average, example, one of these candles here, test the moving average, if it happened within here, and you'd miss that trade, it said, oh, I'm not comfortable taking that trade. You have to say, what happens? Always want to find what happens at the moving average. Take the trade, get the pullback. Then from there, there will be your entry, assuming that kind of candle here occurred here. Stop then will be tighter, stop down here because you have a breakout pullback, stop will be here. And then again, you want to do a measured move to see how far you go. But you've taken the trade here, you've either set your profits there or you're saying, okay, let me see, I'm managing my trades because I'm available. I want to manage my trades and see how far I can go. From that level, there's a breakout. You're hoping that the market gets to that level. Market doesn't get the level, starts to turn. So at that point, when you start to go sideways price action, you can close the trade or you can close your trade here, okay, and then come out of the trade. Having a quick look at the chart. Another opportunity still within this market that we must talk about. So assume for whatever reason, you've been there, you've made your money, you've come out taking your profits, or you didn't take the trades, or you were not in the market, you come in and say, okay, now what's happened? Where should I be trying to jump into the market? So your thinking now changes, okay? Because now you're thinking, there was a high, market didn't actually break, there was a breakout, there was no follow through, small candle, another breakout, and we've gone sideways. So the bulls are failing to create the momentum because if the bulls were strong, from here to that level, and the bulls want to get to that. So now, failed breakout above this trading range. I want to see what happens with the moving average. There is a close between the moving average. We don't trade that. We've got to wait for a pullback. Okay. So we don't trade that. There's our pullback. There is the first trade you could take as a bear. Okay. So you could take that trade as a bear. So you could take that trade as a bear. Your stop will be up here, right? And your goal is to see if you get down to this level. That's your objective. That's how far you wanna go. Breakout beneath that, follow through. The market goes sideways. So if you didn't take that trade at all, you gotta wait for the setup. What is the setup? There is a low. You wanna see another low. Okay, your setup now. I have a lower high. Then I gotta wait to see if I get my entry. I would have wanted to see a pullback here. Nothing would have been triggered. But then a market that tries to get above that, I get a double top, 2-bar reversal, still off that particular setup. If you are in this trade, guys, if you've put your full risk on, do not add on here just because you see setup, because you're doubling your risk. You're getting into that zone of discomfort where you don't want to go. But if you hadn't taken that trade and you've seen all of that forming and you see that setup based on this pattern here, take that trade right there. You don't have to wait for it to see a pullback because this is a setup for the pattern that you've seen there. Your stop is still up here and you're trying to get to that level. Okay, because you're saying, well, that's the first leg. The market's kind of created a double top, but maybe we'll get to that level. So that's where you'd be taking your profits. And then there's nothing further that you can do at this stage. And again, so what's the kind of outlook for possibly for the rest of the day? You're not waiting for price to get up there. You're saying, okay, the market gives me a breakout above here, which is almost the open of the day. Pulls back, they're trying to get to that level. Fantastic, I can look for a trade. But if on the other hand, the bears are strong, and they close beneath this level, I get a strong close beneath this level and pull back. That's where I want to take my trade, and I got to hold down to there. So the point, there are many points, but one of the most important things that I keep emphasizing over and over again, as you can see, there are profits available to make in the market. But some days, I mean, if you ever look at some days, I mean, if you just come into the market and this happens to be your day, this happens to be the time that you are available in the market. I mean, there's no distance set up for you to trade. Trading range price action, unless you want to just go from there's a setup, lower high, and try and get down here. It's a lot of anxious moments just trying to force the market to work for you. If you don't see the patterns, if they don't form, if the strategies don't form, just wait. If you get a couple of distance setups, you get one distance setup which you manage very well, you can make more money than you would in a year with a bank out of one day. But it requires the discipline, it requires the strong mind to continue to manage yourself. Okay, so again, this is gold, same kind of thing. Let's be patient, let's wait. All right, guys. So that's where we are. Or this, who knows? 27. Other things, you must keep checking the news, guys. Keep checking. I think there's something at 2:30, if I'm correct. Keep checking the news. Make sure either your stop is at a technical level. Do not initiate trades ahead of the news. Just stand back and watch. They always look beautiful afterwards, but you don't want to lose your money unnecessarily. All right, guys. So take care. We will catch up with you again next week. John, well done on those trades, buddy. Keep at it. And hey, all the buddies that are coming up on social media, appreciate you guys. I appreciate all the feedback that I get. Let's keep trading gold and euro and creating those profits. Take it easy. Have a good week and stick to your strategies.